Hey everybody, Tim Knight here, Slope of Hope. I'm not going to think of any cute or funny way to say it. Just if you see some ads of interest to you, please do click on them because that's the only dollars I get from all this lovely hard work I do. So don't forget me. Anyway, enough of that. I've got a post-it in front of me. I've been scribbling some symbols down, and the time that I went scribbling those symbols, the euro had a nice pop there, and the ES went from pretty nicely red to somewhat green. As we all know, the Forex has been really driving the market for months on end. And of the three kind of drivers of stock motion, two of them are very political. So one of them, earnings, is real, and that seems to have been doing great for the bulls. Google and Apple being two stellar examples. But the other two issues out there, which are big unknowns, is the whole euro debate, which seems to be endlessly dragging on for more than a year now, and our own debt ceiling. So I've kind of gotten tired of what's the latest news? Why did it just pop up 30 pips or whatever? But somebody sneezed or somebody scratched their head in a certain way that was bullish on the euro, so it just did this little pop higher. And as we look at the ES as I'm typing this, and who knows what it'll be by the time you watch this video, it went from being 1316 down here to way up around 1325 almost. So nice little pop there. But let's just back up a little bit and look at the euro and the NQ real quick. Here we are late in July. The markets, if you really take a step back, haven't really done much of anything as a whole for the year. I mean, it's just been just a whipsaw city. Everybody's standing knee deep in whipsaw dust. We see here the past. So here we have this, Greek being bailed out again, explosion. This whole shtick right here was like Greece saved. And then down here, I guess, is a combination of kind of Greek doubt plus debt ceiling doubt. And then we've had our latest earnings / debt ceiling is cool rally. So I don't know. I'm getting kind of tired of it. Doesn't matter, but I'm getting tired of it. It's just really a drag to watch. No trend at all. Here's the NQ. As of last evening, it looked like this was about to rocket to some really important new, 10-year plus highs. Because as of here, you could, if you squint, make it a pretty decent inverted head and shoulders pattern. Apple came out with astonishingly good earnings. They popped up 7/8% after hours yesterday. And the NASDAQ fell pretty much all day, and it fell more after hours. Weird. Intel, eBay all came out with good earnings, and it fell. Now, I guess, again, squinting, one could see this as a buying opportunity because you've got this base here with a kind of support at, call it 2370-ish. And so, yes, indeed, we fell today and after hours. But you could say this was just a retracement. Maybe it will kind of buck up and get past that line. It would take a lot, but these days, an announcement on the debt ceiling or an announcement from Europe would be all it really takes to finally make the oomph push above that. But I'm with Market Sniper on this. The notion of predicting what's going to happen in September or October seems crazy. I mean, I'm taking things minute by minute at this point. I am intrigued by lunar cycles and all that other stuff, but for my own self, I really don't base my positioning on them. Just like I don't base my position on what John Paulson says. John Paulson is a very rich hedge fund manager. He did a great call in 2008 on shorting mortgages, but just because you've had one sensational success or even 10 successes in a row doesn't mean your 11th one is going to be correct. It simply gives you credibility, that's all. So I don't understand moon cycles and really don't, I'm not going to base my stuff on it. I'll just base it on my charts. Now, let's get away from these intraday things and turn our attention to the more standard 10-year dailies that I'm using. Looking at a few index charts here. NASDAQ Composite, kind of the same story as I was just describing. The opportunity for a breakout is right here at not about it exactly, 2892.36. Hasn't happened yet. A little bit of an inversion head and shoulders here might happen, but things have been very, very scrambled all year. Up, down, up, down, up, down. It's like the market's doing push-ups. NDX had, I think, almost exactly the same change today, 0.43%. As we zoom in here, here's the line, 2418.99. That is the recovery high so far all year. Up, down, up, down, up, and then kind of down, then up again. I mean, is it finally kind of shaking out of this cycle? If it breaks above here, it will. We shall see. That's why I call the title of this one Dunno Video, because you're just going to hear me shrugging my shoulders very audibly here. I just find the graphs interesting, but there's really no trend or direction. Now, I've still kept this highlight here from back in 07, 08, this topping pattern, because it's still very similar to what's going on right here. And just as I'm sure as it was frustrating here, the up, down, up, down, up, down, once this resolves in one direction, things get a lot easier and clearer. And so this is why I'm not real eager to go long precious metals, because this is to me, it's not a bullish pattern. Even if you want to argue it's not a bearish pattern, it's a range bound. So I suppose you could play it in that instance. And if it is range bound, we're kind of on the high side of it. So don't get really excited about going long precious metals here. The Indu fell just a smidgen today. We're still beneath that broken trend line in spite of recent market strength. But it'd be real nice to get some direction here. Right now it's a tremendous amount of indecision, and as I keep saying, for the balance of 2011, I would say that the entire year has been an exercise in indecision. Here's the mid caps. We had broken above this line back in January and have just been wiggling ever since. The S&P 100 $OEX, not quite as much strength here, and still the makings of what might turn out to be a really nice head and shoulders pattern, but it is definitely not complete, and we are simply at the highish end of this range. Russell 2000 RUT coming up ever so slowly. Here we are. It will really need to just get lit on fire in order to break away from the kind of this tractor beam going on right now. Current high on this was set way back on May 2 and 868.57. I mean, yes, if we push higher on this and break above it, you could see a hearty, I'll go crazy here and see even a rally up to almost 1,000 on this if it did that. But it's really going to take some magic, be it, again, something miraculous on the debt ceiling, or the euro soaring, or dollar collapsing, something big. But people can't get too complacent, even about momentum stocks. Take a look at the likes of Riverbed. Until yesterday, this was a handsome looking stock. Huge basic pattern here, nice steady volume growth, and sort of had the markings of a winning high-tech stock. But in a single day, just one day, down 22.5% on very big volume, obviously, and sending this back to a level seen last year in November. So all this meandering really snuffed out in no time. And to say nothing of Apple. Apple had a good day, but it closed near its lows of the day. So all these Johnny-come-latelys we see here, this bar, everybody kind of jumping into Apple. New investors wind up in a pretty crummy position. And then, of course, there's Zillow, which came public today. On the one hand, 78% pop from the IPO, tremendous day. On the other, pretty much closing near the lows of the day. I don't know who buys these IPOs, but just look at this craziness. I mean, especially these poor suckers up here. My goodness. Anyway, I'm out of time. Sorry I'm not saying anything more clear about this is going to happen, but I don't know. I really don't know. And I guess honesty's got to count in a business like this. Well, that said, good night and pray for clarity.